Stocks rallied this week when every single news event broke bullish. On Tuesday, the job opening labor turnover survey showed that there were 8.8 million job openings in July versus the 9.5 million that were expected. This is one of those examples of bad news being good news. Because the job market is weakening, that means that the Fed's job is working, and they might not need to hike again in September. On Thursday, there was more bad news that's good news in the form of the Personal Consumption Expenditures Index. The PCE, which is the Federal Reserve's favorite gauge of inflation, came in line, showing a 0.2% increase in July. It's important to remember that a positive number in any of these inflation reports indicates that we still have inflation. But what the Fed's looking for is a decrease in inflation. Disinflation. On Friday, the non-farm payroll report came in and said that there were 187,000 new jobs in July, which was higher than the estimate. However, unemployment came in higher than expected too, at 3.8% instead of 3.5%. And even though it sounds crazy to be wanting more unemployment in the United States, it indicates that the job market is weakening, and that is incredibly important for the Fed's fight against inflation. It's not that the Fed wants people to be out of work, it just wants people to stop spending as much. If we all save instead of spend, that means that prices will come down. There was also sector-specific good news this week. The U.S. Department of Health and Human Services came out and advised that the Department of Justice lower cannabis from a Schedule I narcotic to a Schedule III narcotic. This is dramatic because other Schedule I narcotics include cocaine, LSD, and heroin. And that's where cannabis has been. There are still many steps before cannabis can be legalized on a federal level, but this is a huge one in the right direction, and the entire sector skyrocketed this week. Finally, the District of Columbia's Court of Appeals overturned the ruling of the SEC denying Grayscale's Bitcoin Trust from becoming an ETF. Now, this doesn't mean that the Grayscale Trust can immediately become an ETF. It still needs to apply, and there are plenty of other tools in the SEC toolbox that could prevent or at least delay Bitcoin spot ETFs from being approved. The reason that the SEC's ruling had been overturned by the Court of Appeals was that it was arbitrary. There didn't seem to be any real reason why the SEC would approve Bitcoin future ETFs and turn around and deny a Bitcoin spot ETF. So it was good news at first, but as you'll see, Bitcoin ended up giving back all the gains and then some, because it got priced into the markets and people realized it wasn't as big a catalyst as some thought. Now that we're officially in September, there's a lot to be aware of going through to the coming weeks. September is the only month of the entire year where the stock market is down on average. And this is because investment firms and hedge funds will reallocate in September to get ready for the fourth quarter. In doing so, they often close a lot of losing positions and take profits in others. So it's a general selling time in September. Additionally, we have 4 main catalysts coming up in September, and each one of them could break to the negative. First up, the United Auto Workers Labor Union is negotiating with the American manufacturers. It's highly likely that they'll strike, and if they do, that dings the US GDP to the tune of hundreds of millions of dollars per day that they're striking. Additionally, the US government needs to negotiate next year's budget, and that's coming up at the end of the month. And some political pundits believe that we're going to see a government shutdown. Whenever that happens, the stock market sells off dramatically. But it's good to keep in mind that it tends to be a buying opportunity. Once the government comes back, stocks recover quickly. Later in the month, the Federal Reserve has its next meeting. And although the belief is that they will not hike rates since the data is cooling off, there's always the possibility that Powell pushes one more through. And if he did a surprise hike, that would cause stocks to get weak. Finally, the student loan moratorium ended on the 1st, and all student loans started to accrue interest once more. The first payment in more than 3 years for student loans is due October 1st, even though the average student loan payment is around $300, which should be an acceptable loan to be able to pay off. A recent survey of Americans came out and showed that 61% of respondents are living paycheck to paycheck. In other words, the resumption of student loan payments could make an already weak U.S. consumer even weaker. And since the majority of our economy is founded on the backs of the U.S. consumer, if they stop spending, that would be weak as well. We're back in a normal time of the year for the markets, and this one from September and October is historically shaky. As I've said before, my own research shows that from August's highs to October's lows, there is usually at least a 4% sell-off. And if you look at last year, it was nearly 20%. So we are entering a seasonally weak time for the markets. Over in Bitcoin, it was a crazy week. And like I said, after the SEC was overruled by the Court of Appeals, you can see that Bitcoin really popped. This is an example of technical analysis working until it doesn't. I get frustrated with people who refuse to acknowledge fundamentals or news events. There are many technical analysts who will actually arrogantly claim, show me the charts and I'll tell you the news. Bitcoin ended up rocketing through the points of resistance that we discussed in previous weeks, flying through 26,800 and 27,250. However, it didn't make it to our parallel channel that's been in place for weeks now, and this proved to be a significant point of resistance. Accordingly, we will raise our target for resistance up here to where Bitcoin stopped at $28,127. However, you can see that Bitcoin immediately gave back all of those gains, as investors realized that this didn't mean a spot ETF was anywhere on the horizon anytime soon. Additionally, the Bitcoin miners took advantage of this pop and sold significantly, which resulted in Bitcoin selling off nearly 10% in just 2 days from its high. To make matters worse, on Friday, Bitcoin broke through this key level of support we'd been talking about in weeks prior, and it actually cracked through $25,368. That means our new level of support is down here at $25,325, the low from Friday. But as I said last week, I don't have a lot of faith in that low. And even if it did break through and our next level of support is down here at $25,150, I don't think that would hold either. In fact, we'd go back and see $24,750 as a point of support, and if that doesn't hold, we're going much lower. In the short term, the next level of support would be down here around $24,300, followed by $23,944 back in the past. Given that there were so many people that bought in June around this $24,350 mark, I have a feeling if we break through that, a lot of them are weak hands, and they'll likely sell into the market. The bears still believe that Bitcoin's going to pull back significantly, with that BlackRock analyst from 2 weeks ago claiming that $7,500 was a reasonable target, and he's actually bullish in the long term. Personally, I think $7,500 is too low, and if we can hold the support that we've seen over the last couple of weeks, $25,000 could be the bottom. That being said, Bitcoin has a tendency to not hold support after 3 attempts. In other words, if it attempts to break through on a 4th try, it usually does and breaks lower. Additionally, since we broke back below that level of resistance we saw a few weeks ago at 26,800, it's back on the table. So we need to break through 26,800 on the bull side in order to see a more significant rally, and we need to hold this level of support at $25,150 to see the bulls maintain support. If the bears push us further below that level, we'll see a sell-off. Additionally, this is a weak time for Bitcoin and all risk assets, so if we see a sell-off in the stock market, it's almost a certainty that Bitcoin will break through to new lower lows. Over in the investments in play portfolio, this week's biggest winner was Canopy Growth Corporation, which absolutely rocketed 40.92%. This was all on the back of the news that the FDA had recommended that cannabis had been descheduled from a Schedule 1 narcotic to a Schedule 3, and this caused all cannabis stocks to rally in a big way. However, it's really important to remember that Canopy Growth has a lot working against it. It was recently discovered that they had financial errors and financial issues that made it so that it was questionable whether or not their reporting was accurate. Additionally, it's an asset-light model, and Canopy needs cannabis to be almost fully legalized before they can engage in their plans, which means they still have to survive until legalization, and that's not anywhere on the horizon right now. Finally, when you look at Canopy, even after this week's nearly 41% gain, it is still down 76.21% on the year, so this isn't one to jump into. This week's biggest loser was Dutch Bros, down 4.5% on the back of consumer weakness. If we are entering into a recession, even a soft recession, consumers will cut back on discretionary items, and there's nothing more discretionary than expensive coffee. Additionally, some investors believe that Dutch Bros is opening too many locations too quickly, and that this could impact its future growth. Over in my speculation and play portfolio, the theme around the cannabis sector played out once more, with this week's biggest winner being GrowGeneration, which rocketed 23.95%. As I mentioned previously, this was all on the back of the FDA recommending that cannabis be descheduled. So GrowGeneration was this week's biggest winner. The funny thing about penny stocks is that they can take all the winnings from one week and give them all back. And that's exactly what happened this week with our biggest loser, Golden Minerals, which was last week's biggest winner. Despite getting approval from the New York Stock Exchange for its plan to prevent its delisting, Golden Minerals ended up selling off 11.08% this week, giving back all the gains that made it last week's winner and then some. If you want to follow along in all of the moves in all of my portfolios or what I'm doing in Bitcoin, you can do so 100% for free from my website, getirked.com. Please hit like and subscribe. It really does help the channel out. and I'll see you in the next video.